G'day everyone, Nathan here, your mortgage advisor with Loan Market Paramount. Welcome to the last video update for the whole year. And just want to say thank you very much for all your help, support, trust the whole year or over the last few years and helping you achieve your property and financial goals. This year has been quite full on in terms of the workload and in terms of the team, but we are very proud of what we have achieved and really stayed together as a team so we can look after you as our valued clients with your finance applications, top-up applications, buying, selling, first home, investment property, development loans, construction finance, and thank you so much for really trusting us that we can deliver the job for you. Speaking of our own work, as you guys know, the mortgage broking space has been quite full on over the last couple of years as banks have started to shut down their branches. I remember when I used to work for a bank, the broker share used to be less than, I think, 15% because no one used to go to mortgage brokers, everyone used to go to their banks. Our mortgage broking share and entire home lending with some of the banks is now sitting as high as 60%. So you can imagine the more and more banks branches shutting down, the staff keeps changing all the time. Our commitment to you guys as our clients is still the same. It's only going to get strong and strong as we are providing more resource into the business. So we have teams to look after your top-ups, we have teams to look after your refixes. I'm available, my phone is available, the whole team is available if you have any need. So I really want to thank you to entire team and the office as it was quite a challenging year mentally for us in handling all the workload and still managing our work-life balance. Speaking of the banks, there are some exciting changes coming digitally due to COVID. As you'll probably see, if you need to apply top-ups, no banks used to accept digital signatures. Now a couple of banks, they have come out and they will be starting accepting digital signatures from next year. So if we send an application to you guys, you can actually complete the whole application without being able to print any of the documents. Most of the banks still require the declaration to be printed and physically signed, but I'm hoping from next year they will enhance their digital platforms and they can start accepting those digital signatures. That'll be a game changer for us because that seems to be quite a lot of barrier when we submit an application and it takes ages to get all the documents back. From the lending point of view, as you guys will know, it's quite challenging, very hard to get anything approved at the moment. You can't believe how quickly the banks are reacting to CCCFA over the last 4 to 6 weeks. That prior to these changes, we used to propose clients' expense, that once they'll buy a home, this would be an expense. And it has worked. It has worked really well from the last many years. But now with CCCFA, which I believe that was pretty much developed for unsecured lending, all the short-term finance, instant finance, all the personal loans. There was actually, these rules were designed to handle short-term lending market, not the home lending. But Reserve Bank has imposed CCCFA on all the banks, so they have to apply. And majority of the banks, one of the biggest bank in New Zealand, is going through a massive change how they calculate your affordability. So prior to that, we would have told the bank, look, these would be your ballpark rights payment, these would be your ballpark insurance payments. Now the banks are actually going into the council website, they check what the rate is, they apply that rate. That this is how much, for argument's sake, if you're buying a home for $750, $800, and the rates are 4.5, they'll factor 4.5 when they assess the home application. I've got a loan application declined. He's a good client, but he had some guests over. He spent $800 in alcohol over the last couple of months. Not that he drinks that much every month or every quarter, but since the bank look at your last screen 3 to 4 months of bank statements, they are now judging your behavior, how much money you're spending, and they're factoring every single expense when they assess your home application. So my friendly advice would be, if you are looking to apply, make sure your accounts are looking spick and span. No short-term debt, no unarranged overdraft, no late payments, because these small things related to your account conduct, they can kill the application. Of course, income needs to be super strong to get a higher lending approved if you have low deposit. Now it's a mission to get anything approved if you don't have 20% deposit. Most of the banks, they've even started to pull out the conditional approvals, which is quite frustrating, disappointing, as majority of the banks, when they issue a letter of offer, they generally honor that letter of offer. You guys might have seen in the news, few banks, they've actually pulled their conditional letter of offers. So we always recommend, look, have a chat with us. If you're looking at buying something, you don't have 20%, still there are a lot of options there, but please chat with us. Building a home is still exempted, and I believe the new build market to still stay strong. However, look, I don't want to be negative, but I can see a short and sharp recession is coming over the next 3 to 6 months time. Now, how deep that recession will be, I actually don't know. We're just planning everything in the office, couple of months, but I've got a feeling with the way interest rates are moving too fast, too quickly, OCR is still sitting quite low. Like OCR is still under 1%, and 1-year rate is nearly touching 4%. 2-year rate is nearly 4.5%. 3-year rate is nearly 5%. So how do people afford the mortgages if they go 7 to 8%? And in my personal view, I will be very surprised if the rates will go 7%, because, you know, average debt in Canterbury is still manageable. Average debt in Auckland is still way above. So people won't be able to afford 7-8%. So keep tight for the next sort of 3 to 6 months if we have tough times. But remember, if anything that concerns financially, if you have any concerns about your mortgage payments, about the loan restructure, we're always available to help you. Our last day in the office would be 24th of December, and we'll be back in the office on 6th of Jan. A few people will start on 10th, but we'll be back on 6th of Jan. So any questions, just give us a buzz and we'll be more than happy to help you. We'll be going through all our conditional approvals that we have currently sitting. So if your loan is expiring, we might get in touch and just might ask for some new documents to refresh that home loan approval for you. Prior to these changes, we can email the customer by ringing you and say, client's financial personal position is same. Please roll the approval for another 3 months, but now we have to collect all the documents before we refresh. So it's a hell a lot of changes for us coming, but we just want to make sure that we do the right thing from a compliance point of view. Rebecca in our office, she was customer service manager. She's been promoted to lending team leader in compliance. She look after operations for the business. She look after a lot of office structure to make sure we are safe. You as our clients, you guys are safe, and everything we are doing is in line with expectation of the Reserve Bank and all the banks. So yeah, that's quite a heavy discussion, but just want to say, look, from all of us, wish you guys Merry Christmas, a very Happy New Year. Have a great time. Hope you enjoy some summer, and we look forward to catching up with you and helping you again in the new year. Thanks very much.